Hope everyone's doing well and welcome back to another video. So cool. The first thing we will be starting with is the trade breakdown that I was meant to get out for you guys after the recent screenshots I sent into the main chat. So we will hop right into it. It's not going to be a very long one, and I wasn't even going to make this video at first, aside from the fact that I said I would. A big reason that I wanted to was to sort of show, right, even though this week is a low probability week, how sometimes you can navigate the market, how sometimes you will get opportunities which can be very tempting, and how to sort of decipher, is this really worth it? Am I going to get stopped out? How do I handle it? How do I sort of account for that lower probability? What the sort of things you can do. So we will brush over those topics quickly. So cool. The first thing you guys probably saw me mark out there is a daily order block, which I just done in front of you. And the sort of range we were looking at for price was from this high to this low. And we were considering a lower scenario, right? This is on the Tuesday, by the way, for the DXY, because I knew I had a daily fair value gap here. I knew I had an order block and we had a high. This is the sort of area I would expect a reversal from, right? So cool. Now, when we look at this price action, this is absolutely horrible. This is not trading price action. And to an extent, I will openly say, perhaps I got lucky. Perhaps the whole group chat got lucky there when I told everyone to take profit. However, it's a bit more than luck, right? It can be a part of it that we got lucky that price ran all the way sort of to the bottom of the consolidation sort of area we were looking for price to hit out. Come back in the London session, this is, sorry, right? So the area that we're focusing on is this London session where we have a run on Asia's high, displacement lower, and all we targeted was this low, right? Now that's the 15-minute time frame. When we come on to the 5-minute time frame, as you guys can see, accumulation, manipulation, distribution, and we had a very nice sort of target here for price. I'll keep it very quick and simple, right? I see an accumulation being engineered with the highs of Asia, given that context I just gave you guys on the daily time frame, expecting a sort of bearish move. And what we can see is that this accumulation occurs. We get a small sweep below, a run above, and then again a run through that. And we have these sort of sell side targets as sitting ducks, right? So cool. What I said to the group chat at the time was, it is probably a difficult entry. If you're going to get in, you're best off sell stopping this. So really and truly, it's a buy stop on your GBP/USD or Euro USD. But on here, it would have been setting a short when price breaks through this low, right? Well, this as the high, and we would have targeted this for about flat 1R, the DXY. It's a little bit nicer on GU. And of course, 1R in the grand scheme of things is not a lot, right? It's not something that would probably make a lot of people happy in the trade. But considering it's the day before FOMC, is trading in what we would call overall lower probability week, it's actually not a bad result to come out with, right? So again, I know I've brushed over it quite quick, but that's how I sort of want to format these, trade breakdowns, and you guys will see it's a lot of, just the context is more so the bulk of the thing. The rest is just waiting, and the entry happens pretty quick. And once we got in this displacement, there wasn't even really time to trim the risk, but rather what I told the group chat was, listen, when this is hit out, that's it, right? Everyone should probably just close their trade here. I did say if anybody has taken their risk off the table, meaning if they've gone break even, then you can potentially look to hold towards this, right? But after I said that, I still said, you should probably cash out somewhere around here when price started retracing, and that would have been the better decision to make, as you guys can see. So the trade was mirrored on GBP/USD. Look at, yep, this is Tuesday. What we actually saw, so it's around about here, price gives a sweep on a low, break on the high, gave us the run above, very similar, you guys can see, right? The position would have been taken roughly around here as this candle was building up, right? Approximately around here, covering this low, and targeting this high for about, as we said, a flat 1R. As you guys can see, price just blew through that. Very simple trade, very nice low covered. So it was this low that was covered, right? And depending on exactly where your exit was, just above 1R, or most likely for a lot of people, because of where you would have got in this candle, probably would have been about 1R. But you guys can see, very simple trade, right? And one thing you should take note of is that sometimes what I see very, very commonly is that people get chopped up very early in the session. This early in the session, there was no sort of setup presented in my eyes, at least not in line with the bias. The only sort of volatility we could argue is this sort of move down and back in the range and consolidation. But once you start seeing a consolidation, wait for that next kick. See when you get that next bit of volatility. And the next bit of volatility was 1, 2, 3 candles running down, sweeping sell side, and then that immediate reversal. That is what essentially made up for the framework and made this high a very easy sit-in duck over target for the session at least. So we were in and out within about 20 minutes. And it was a very easy scalp. And of course, guys, I recognize this could have, potentially gone wrong, right? But with some of these things, once you see them enough times, once you see this volatility kicking, you see that reversal, and you have the supporting context, then you execute on it, right? And how do we combat that idea of, this is a low probability week, what should we do? First easy thing is just don't trade. If you're not confident, and that's a sort of buy in thought in the back of your mind, just don't take the trade, right? The second easy thing you can do is halve your risk. If you're going to enter these setups, take it on a 0.5%, still manage your risk as you've been taught, have those stop loss trims, whatnot. Worst comes to worst, you get stopped out. Hopefully it's a loss even smaller than 0.5%, and at worst 0.5%, right? And the third thing is just be conservative with the take profits. Although this was a potential target on GU, made it clear, this is the sort of local target, this is hit out, let's call it a day, right? So very simple there, very easily done. And now we will get into a midweek outlook, right? Which will hopefully be the more interesting part. That wasn't a very interesting trade setup, if I'm being honest. Not one where I can talk about a lot of things. Perhaps one of these days we're going to get a very nice market Excel model and whatnot, and we'll be able to go through a lot of the more technical aspects of it, re-entries and blah, 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 whatever, right? So cool. Today we had the FOMC for the dollar, right? And if I'm being honest, it's not added a huge amount of clarity. You see this cluster on the 4 hour, it's just not clear at all. Come down on the 1 hour, we can see this is still essentially accumulation, sweeps one side, sweeps the other side, now going back into the accumulation. On the daily time frame, what is nice is how nice this wick is. If we can continue this move down, right, I'll be happy for price to work its way lower, right, back towards this area. Why this area specifically? Because we have a 4 hour volume imbalance. We have a massive gap with no trading in that. So it would be nice to see at a bare minimum price retouch this. But even nicer would be if price can displace through this, right? Displace through this. And it will just set up that bearish sort of daily market maker somewhat we spoke about. Now, from a fundamental perspective, the FOMC I think has come in dovish as the market expected. But because it's in line with market expectations, we've not had a whole load of movement. Now, what I would pay attention to tomorrow, Thursday, is GDP. This is something you guys can go back to. Sometimes when the FOMC does not move as much as we usually see it move, or as much as we expect, this GDP can hit like a hammer, right? Another thing to take into consideration, we also have the Euro interest rate decision tomorrow, right? And this can definitely have an impact on the markets. These are two news events I would let pass and then consider trading, rather than, hopping in very early and trying to hold through. So cool. What would be nice to see is displacement lower from here, sort of leaving this FOMC high intact. I like to consider this as the sort of, lower time frame accumulation, manipulation, and now just the distribution phase if we can get continued run this way. what also had panned out for the day was that this is actually a market maker sell model. Got accumulation, reaccumulations, SMR over here, and then the nice displacement down. If this can continue, it will be very nice. Overall, we do want to see it go lower. If you quickly take a look at the US 10-year, let's make the outlook. What we can see is price is printing a second leg, right? A bearish second leg specifically, which is exactly what we wanted to see. We want to see price push through this. What I do want to see is a continued move this way to actually close below this low. And if that, occurs, let's say price, comes down here, then we have from this high to whichever new low will be created, we have a nice new range to play and look for lower prices, which will be in line with this sort of large sweep that we've had here. So cool. Now, this is a chart that I'm sort of expecting fireworks on tomorrow, per se, due to the Euro's interest rate decision, right? And in regards to bias on Euro GBP, I think it's in a it's in a bit of a sensitive spot, because we did have this sell side marked out. Price did come very close to it. It's actually engineered lows in line with it, but instead displaced higher. Now we sit in a weekly fair value gap. Move higher from here, and it's a weekly IO Fed, and I would expect that price continues even higher, right? And that would be dependent, or would rest on if, right, the ECB, the European Central Bank, are going to raise the interest rates. If they've raised the interest rates, it's very likely we push higher, right? And that too with displacement. If the rates remain unchanged, there's still a chance we can move higher. One more push to this fair value gap, then we can, potentially drop. That's just something to bear in mind. Bitcoin. The Fed, or rather Jerome Powell, actually said some very, very positive things about crypto today. Once again, price came into our beloved daily fair value gap, tapped into it. It's been respecting it for 1, 2, 3, 4, 5, 6, 7 daily candles now, which is good. Seems like a strong area of support. And we have displaced high, right? From here, seeing price respected like this, especially having this one big wick, which would have flushed a lot of sellers, rather trap them, then I would like to see that move back up again. I want to see Bitcoin push back up for this high. If tomorrow's daily candle, or one of the upcoming daily candles, can continue this way, it would make life a lot easier and would set price on sort of path to run through this accumulation. We can see as an A, M, and then this to distribution phase. Again, we have GDP coming in tomorrow, right, which is a major mover. It can have a big impact, so we'll see how that goes. Yeah, it comes out, so it should help everything shape up. So cool. But S&P, we wanted higher. We have this week so far opening, coming down, hitting into this weekly order block, and actually coming into the discount of the range. And from here, I would favor the move higher. Right, overall, just want to see price work back up to the high. And now, knowing that we're coming from discount, we know we're going to build the next leg, so we want to see price go even higher. I would say roughly, somewhere around potentially 6.2, right? Will be a good target, a nice whole number before we see a retracement. If price is going up very hard, we might even push towards 6,250 potentially, and then have a new sort of leg creating for price, right? But yeah, guys, pretty simple weekly outlook. Bias still is just not solid, I'll be honest. There's not a very, very clear read. We'll definitely let that news pass tomorrow. If I had to favor a side, I think DXY goes lower, but it is not a concrete bias. So we'll let the GDP pass, we'll let the European Central Bank's news pass, and we'll assess it from there. And I'll drop some things in chat because most likely won't put any video out. But yeah, I hope all of that made sense. If there's any questions, anything I can help with, just leave it below or in the Telegram chat.